All right, here we go. This is the very first Sunday stock talk on my new finance channel called Street Spartz. If you could follow along, I would really appreciate it. It's Street as in Wall Street, and my last name, Spartz. In case you didn't know, I'm Derek Spartz, and I'll be the host of this channel. So I think the idea behind this is that we'll just kind of build a community together, I hope. So as this hopefully grows and more people follow along and participate, I really want the comments below on some ideas that we should talk about, comments, feedback on certain stocks. This is particularly going to be focused on the stock market. So this is money that's in my brokerage account, and it's money that I could totally just lose it all and I'd still be okay. So I have retirement accounts and no debt, and I hope you do as well. Pay off your debt if you have debt. Follow Dave Ramsey. That part of his theory, I definitely agree on. You shouldn't have any debt weighing you down. So this is money I like to have fun with. And at the same time, it's been a little bit frustrating because I put a lot of time and effort into this. And I was just curious. I looked up last night how I'm doing compared to the S&P 500, the pretty much standard benchmark for everything. And I'm literally exactly the same. So that means I could have just bought SPY and been at the same point of where I am and just slept at night and done my own thing. But that wouldn't be as fun now, would it? So I'm going to try to show you some screen charts here too while we go. And so you can follow along if you're watching on video. If you're listening on audio, obviously you can't see that. I'm going to try to be as transparent as I can. So I'm actually going to list all of my holdings in this brokerage account down in the description below, so you can see everything that I own. I'll also probably go over them all today. But in the meantime, let's start off with, I'm going to do a few stocks that I'm kind of into and keeping an eye on right now. And then we'll roll into some of the trades I made this week, buy and sell, and then I'll round it out with my options activities. So if you're unfamiliar with options, you can just disregard that whole section and learn about options before you take any advice there, because that can get real dangerous real quick. So please don't invest in options if you don't know how to do them. First up, let me just pull up a couple notes I had written down here. First off, I wanted to ask the community out there, if you're watching along, what do you do for AI prompts that have helped you invest? Because I'm having a real hard time, first of all, just trusting the data. Gemini has kind of been my go-to. I'm going to explain more why on that later. I actually own some Google stock over ChatGPT because I just find it to be more helpful, especially with their Nano Banana, the picture creation. It's incredible. It's so much better than ChatGPT. If you haven't used it yet, check out Nano Banana on Gemini. But I was asking it some stock charts. I was trying to get some images for a video that I created recently on Warren Buffett's final quarter, and everything I had to question whether it was right or not. And almost every time it was incorrect. And then I would ask why it was giving me incorrect chart data, which should be fairly simple. You can just pull up a stock chart and show me the data, and every single one of them was wrong. So I got really frustrated. I spent a lot of time on it, and then I just decided to just forget it. And I didn't end up using that at all and just created my own images with real data because I didn't want to be sharing false information. So as AI gets better every single day, it still is showing a lot of false information. And that's because it's sourcing from the internet, and the internet is, as we know, full of a lot of false information. So I'm just curious if any of you out there are using AI prompts to help you with your research, or kind of just setting up some kind of app or tool to kind of help you decipher what stocks you'd look to invest in. If you have any ideas, please put them down in the comments below. The one I haven't used that everyone seems to love is Claude, and I really need to get on that, but I personally have not used Claude at all. I think that's going to be on my goal list this week. Next up, though, what I did want to talk about is I am very into cars and Las Vegas. So let's touch on those two stocks first. Cars, if you weren't aware, I also have another YouTube channel called Petroelectric. I'll put the link to that below as well. I talk just all things cars. It's a fun little hobby channel that has a pretty decent following. And one company that I'm particularly excited about, there's actually a dealership just a couple blocks down the road from me, is Rivian. It's finally like their Model T moment, or you could say their Model 3 moment if you're comparing them to Tesla, because they finally, after several delays, are launching their new R2 SUV. It's going to be the equivalent of the Model Y to Tesla, which is their biggest sales seller. And this should quickly be Rivian's biggest sales seller too. So I actually did buy more Rivian shares this week. And I'm a little nervous about it because I don't know if I'm just being a fan of the company over actual fundamentals. I did get the initial launch email this week and was really disappointed to see that their as promised $45,000 price is not happening anytime soon, if even ever. So the launch edition of the new R2 is going to be $58,000. That is quite a bit different than the promised $45,000. So they said later in the year, they're going to have like a $54,000 model. And then early next year, 2027, they'll have a $48,000 model. So still no 45 in sight. That's still a very expensive car. It's got to be great for it to be worth that price, because I think they're just going to get priced out. One good thing going for them and a bad thing for the world is this heightened war in Iran with gas prices going crazy. Here in Southern California, we're in the mid fives. Some places are even showing $6 a gallon. So the electric cars looking appealing again, even if those federal subsidies are gone. So I'm interested to see that part of the R2, but also how many people with Teslas are looking to trade it in and go to that R2 instead, because there's obviously a lot of thoughts about Elon out there, and the average Tesla lease I looked up is about 2 to 3 years. So 24 or 36 months are the most popular options. And if you go back in time, I think 2 years would be like October of this year is when Elon officially joined Trump's campaign. I think it was October of 2024. So if we go 2 years from there and kind of backtrack it from there, the timing lines up pretty well for Rivian to cash in on those potential Tesla trade-ins. So we'll see how that story goes. I am bullish on the stock. I think it can get to 20. It's right around 15 right now. I think it'll get to 20 by the summer for sure. Anything beyond that, hopefully, because I've owned shares in Rivian for a very long time, more the fanboy side than the fundamentals, just because I believe in the company and I think it could be really cool. And the CEO, RJ Scaringe, has really dedicated his entire life, so much so that he's in the midst of a divorce because I guess he's never home. So to build a company like that, you kind of have to just be there all the time. So that's really not unexpected and could be a good thing, because maybe he has more time to focus on that and not worry about his wife complaining about him not being home all the time. So there's two sides to everything on that. So it could be good on the investor side. Moving on, let's talk Vegas. Always down to talk about Vegas. This week, we saw some action in Caesars. So their stock has been down in the dumps. Been a little bit excited lately because there were talks of takeover rumors kind of for the last couple months. It became real this week. One of the Fertittas, I forget his name. Let me look it up quick. Anyways, he's a billionaire from Texas, and he owns the Golden Nugget downtown. Tillman Fertitta, that's his first name. Sorry, I confused him with the Fertitta brothers, who also own the UFC. They are related. I think they're cousins, which could definitely come in handy to know the owners of the UFC when you own casinos in Vegas. Anyways, he offered, I believe, $32 a share, $33 a share. It's trading right around 28 right now. So either way, it's about a 20% premium. Nothing's official. I think they're in a 45-day negotiation window where they get exclusive access to this deal. I think this is a huge win for Caesars if it happens, because Caesars and MGM are just kind of ruining Vegas. There's so many issues with fees and just nonstop tack on fees. So maybe a downtown owner who doesn't feed the crap out of people and try to take every dollar and focus more on the experience. Golden Nugget's actually a pretty cool property downtown. It's obviously much different than the Strip, but for what it is, I think it's a really neat property and a good value prospect. And hopefully an owner like that could bring value back to Vegas. Now, there is another offer from Carl Icahn, supposedly, but he's also a huge owner of Caesars. So I think he's just trying to drive up the price. I don't know how serious he really is about taking over Caesars and owning half the Vegas Strip. I really hope he's not, because I think the Tillman Fertitta is a much better fit for this, and I'd really be excited to see that. So honestly, I might jump in on Caesars just be on the hopes that this deal does happen. It could be just a quick flip to make a quick profit. Probably not a long-term hold, though. The long-term hold I do have in Vegas is the real mob-owned Vegas still, and that is in the form of a REIT. It's called VICI, if you're not familiar. It's ticker VICI. They own almost the entire Strip. The real estate, a lot of the buildings. They do whitelisted leases and triple net leases, and it's just a fantastic business. They run it, everything's so slim. There's hardly any employees. Like literally, they own one of the best properties in Vegas and probably the entire country, the Cosmopolitan. They own the building, they own the land, they lease it back to MGM, and they say you have to do everything. Maintenance, everything. It's on you. Just pay us the rent every month. They do that with a lot of properties. The Venetian, they own the land under the Sphere, which is the most incredible entertainment complex in the world right now, hands down. I'm going to do another video on Vici soon. I absolutely love that stock. It pays a great dividend, and it's just super solid. And they own every Caesars property, I believe, because it was initially spun off from Caesars. Don't quote me on that, but I believe they own all the Caesars properties in Vegas, if not most of them. So that's another one to keep an eye on, Caesars. One thing I noticed right now, boring stocks are super expensive. The AI hype, we had some drops in AI, and boring is now hot. So like Walmart is trading at like 40 times earnings, Costco, and obviously oil and gas are just gone crazy, which is good for me because I own a lot of oil and gas, and I always had. But it's not good to have $5-6 a gallon gas, because that just hurts everybody in America. So actually, I think it's time to look back at tech stocks. So Google, as I mentioned, is a big one. I really think in the race for AI that they have the upper hand here. They have unlimited cash. Meanwhile, Sam Altman with ChatGPT is just raising crazy valuations, tons of cash. You've actually seen advertising. I saw a billboard out on the street for ChatGPT, which seems so old school that AI is going to take over the world. But we have like a physical billboard displaying to use ChatGPT. It just seems kind of odd. They're really struggling right now. I think Google was slow to figure it out, but ChatGPT has almost zero revenue. Google still has all their ad revenue, and they've integrated Gemini results into the Google searches really nicely. And I really like where Google's headed. So I think Google is definitely a value play here. It's dropped quite a bit in the last couple of weeks, and I've been accumulating shares as that goes. And last but not least, defensive stocks, again, the Iran situation and just global instability, and the U.S. government's going to raise their defensive spending while Trump is in office. They're going to want to spend as much as possible. It's pretty obvious. And these stocks have been running up the last year while Trump was in office, but they've kind of leveled out and haven't done much since. But now we're actually using these weapons in war, so they're gonna have to replenish them. There's a huge backlog on a lot of these companies, and it's basically an unlimited piggy bank from the federal government. So I have been looking at some defense ETFs. A lot of them have the same top 5 holdings, though. You got like Raytheon, or I think they're called RTX now, GE, Boeing, General Dynamics, Palantir's in there. It's kind of cool to have a basket of all these stocks instead of just betting on one. So if anybody knows of any defensive ETFs that they really like out there, please let me know in the comments below. I'm just kind of in the early stages of all that. Moving on, I thought we would go over some of the buy and sell trades I did this week, and I'll also show you what's inside my portfolio. So starting off, let me see what I did this week because I don't even remember. It was a hectic week in the market. My portfolio wasn't too hectic. Okay, here we go. So first off, I got a dividend. That was kind of nice. Speaking of oil and gas, ExxON-Mobil. It's one of my largest positions. Had them forever. It was paying like a 5 or 6% dividend, which was awesome. And it's still paying the same amount technically, but the stock has gone up like 30, 40% on the year. So the dividend's now like 3%, which is still pretty solid. I think it was about $1 a share. So that was a nice, healthy little dividend that came in on Monday. And then on Monday as well, I bought some Rivian. Like I said, I needed a few more shares to get 100 shares so I could sell a covered call. More on that later. SoFi. Oh, I didn't talk about SoFi. SoFi is a stock that I'm really into right now as well. I did a video on that recently. I'll actually link that up in the corner so you can watch my reasonings for SoFi. Basically, the student loan is going on right now. There's so many Americans that are strapped with student loans. It's actually pretty terrible. A lot of them are going to need to get refinanced because the federal government nothing's for sure yet. The courts have been ruling, but Trump and the Department of Education are doing everything they can not to guarantee that the federal government's going to pay your student loans if you signed up for the employment program, or at least make it very, very difficult. So a lot of these people are going to have to refinance these loans, maybe get them out of federal loans. And that's where SoFi comes in. I think it's their second highest revenue is student loan revenue. So that's one thing. And also there's been a ton of insider buying. There's a couple of executives that I noted in that video. And since then, the CEO has also bought another $1 million in stock options. So they're obviously bullish on the company. In financials in general, I'm really bullish on. Here's another one you might want to look at too. New Holdings. I believe it is ticker NU. Yes, ticker NU. Anyways, they are growing like crazy in Latin America. They're quickly becoming one of the biggest banking opportunities in Latin America. They had a nice run up to like $15, $16 a share. They've actually calmed down in the last few months, down to like $13, $14 a share. I think that's one definitely worth working at. And it has a very reasonable price to earnings ratio now. So New Holdings, that's one to take a look at. But anyways, transactions I did. I don't actually own any of New Holdings, but I have been looking at it. That was it for buys and sells this week. It was actually a really calm week for that. I didn't do a lot, and I'm kind of cash strapped at the moment. So everything I do currently own in my portfolio here. Once again, I'm going to put these all down in the description below with percentages of my account so you get an idea of where it is. I just have a small piece in Atai Berkeley. That's ATAI. It's a psychedelics company by Christian Angermeyer, a guy that I was able to interview. Really, really smart guy. And I believed in the company so much, I just wanted to buy some shares to keep an eye on it. It's a really tiny piece of my portfolio. And it's up like 150% in 2 years. So I didn't expect it to move like that. I wish I would have bought more, but it is what it is. I'm just going to keep an eye on that one and hold it. Next up, this one has done like the exact opposite of that. Bloomin Brands, Bloomin for Bloomin' Onion as an Outback Steakhouse. So their main thing is Outback Steakhouse, Bonefish Grill, one of the steakhouses. I can't think of it right now. Anyways, it's just been a terrible stock. I thought they had a good turnaround story, and it's been awful. I'm actually thinking about dumping it very soon, and I should. This is a lesson to not hang on for the turnaround because it doesn't look like it's coming anytime soon here. That's one I would avoid. Next up, Devon Energy. They're a smaller kind of oil and gas company. It's kind of was a dog stock for a while. It didn't do a whole lot. It was just kind of flat, but paid a decent dividend, and I was able to get some covered call income off it. So obviously all the war in Iran raised all tides, and this one's about the same. It's up like 20% in the last month or so. So that's actually been pretty good for me. Next up, another car stock. One of my personal favorites. I like it better than Rivian is Ford. Ford, mainly because their CEO, Jim Farley, is awesome. I love that guy. He's a really great leader and a good example for the car business, I think, just in general. I've done very well with that stock. I've owned it off and on for years. This recent iteration, I think I've had it for 2 years. On paper, it's only up like 20%, but I'm going to make a video soon to show you that I'm actually up like 50% on this stock in 2 years. So I'm very happy. It's pretty stable, pays a nice dividend. I definitely recommend Ford. Next up, another dog, Flowers Foods. All my food stocks have been awful, actually. Food is terrible margins. I bought this one back in the day because Dave's bread, I noticed, was flying off the shelves. It's one of the few organic options for bread here in the US, and they produce that. They also produce way lower breads like Wonder Bread and things like that. It's a tough business, and it was doing really well. Paid a nice dividend, and now it's down like 50% from where it was even a year ago. The dividends actually stayed the same, surprisingly. So it pays like 11 or 12% dividend. And I think that's the only reason I'm still hanging on to it. And I just sold some covered calls against it because the market actually came back to life. So maybe there's a little life in this. But either way, it's going to be a long road to recover on that. Next up, Google. I already mentioned everything with that. I'm just slowly accumulating more shares. They're expensive. They're over $300 a share. So that's a slow build on that one. Next up, Oscar Health. I'm actually flat on that. That one's been a wild ride with the ACA benefits. Everyone thought that they were going to recur for 2026, and a million things have happened since then. And obviously, you guys all know that just didn't seem to happen, and it doesn't seem to be a priority for the Senate to vote on that anytime soon. So that one's been a tough road. If those would have passed, I think that stock would have sailed. I also thought because of Jared Kushner's involvement in it, Trump would try to get something going with that. It just hasn't budged. So that's one I'm not mad about owning, but I'm not in love with it as much as I was a few months ago. Next up, Occidental. This is one of Warren Buffett's biggest holdings too. Petroleum services, pretty famous oil and gas services company. Their dividend is not great. It's like a 1% dividend, and it was a real dog until this Iran stuff hit. So I actually am up on the stock now, but it took a long time, and it was just slogging it out. And I thought with Buffett's influence and cash pouring into the stock that it would do a lot better, and it just hasn't. So I think now I got some call options expiring on that soon, and I might just take my profit and put it somewhere else. Next up is a fun one, SuperMicro, SMCI. They work closely with NVIDIA. They make like the racks, the cooling racks, a lot of data center stuff. This one is wild. It's up, it's down, it's all around. But I am down a little bit on it, actually. They've had some questionable accounting issues, and there's a lot of drama with this stock. So if you don't like waking up and having a heart attack every morning, this one I would stay away from. But I think it has a lot of good potential. And Jensen Huang from NVIDIA still believes in them. So that guy isn't going to take huge risks if it's a company he doesn't believe in. So I think eventually this one's going to work out. In the meantime, it's a wild one, though. Next up, I mentioned SoFi. I started a little starter position in that to keep an eye on it. I also have some options activity on that. I'll explain later as well. Next one, back to the dogs, StubHub. I got excited about their IPO. I was like, the margin on StubHub is crazy. They just make money hand over fist. And the more I dig into this company, the more I hate it. This is one of the reasons I'm not a huge fan of IPOs. I get excited about a company that goes to IPO, and a lot of times I get burned. So I think that's where I'm at right now. The options market on this one is really hot. So that's the only reason I'm still in it, because I've actually been able to get back a lot of my losses on it through the options market, selling covered calls on this. So there's still people that believe in it out there, I guess. Not as much as they did at first. But in that first couple of months when the IPO came out, I think it was like over the summer, maybe in the fall of last year, It was really hot and it was paying really well. Now it's slowed down, and I might actually consider selling StubHub very soon. Next up, Unity Software. Oh, this one's frustrating. I got to show you a chart of this one. This was also doing really well after years. I think I had this thing for 2 years, finally starting to pay off. Here's the 1 year chart. So it reached a peak of $49 in December and it stayed right around the $43 to $49 range. On January 26th, it was $43. On February 4th, just a week later, it was $24. And now, about a month after that, it's trading at $19. So I should have got out of it when I was profitable, and I didn't. That was definitely a mistake. I don't know what to do with that one, honestly. I'd kind of put it in the back of my mind, and I should look back into it again, but I'm definitely down again on it, which is really frustrating that it happened real quick on that one. Next up, VICI. I had mentioned this. I already talked about this in pretty good detail. This is one of my biggest holdings as well. I love VICI. I'm actually flat on it, but you include dividends, covered calls, and everything. I am up on this, and it's a pretty stable asset. And don't bet against Vegas. They're going to figure out their problems, and this Caesars acquisition could get really interesting and helpful for VICI. So one to keep an eye on there. Lastly, ExxonMobil. I mentioned that too. One of my biggest stocks. It's probably a stock I might never sell. There's always going to be need for oil and gas, no matter what anybody says, and they're one of the clear leaders at least. So I really like ExxonMobil. Next, some of my funds. This is where I made my mistake, where I would definitely be beating the S&P 500 this year if it wasn't for this one. BITX, BITX. It is a 2x Bitcoin strategy fund, which should be like a short-term hold. I really got into Bitcoin for a second again. I didn't want to miss out, and you know how the story goes. Bitcoin's dropped quite a bit since then. I put a large chunk of this brokerage account into that. I still believe Bitcoin is going to recover, and it should just 2x with that, and it pays a nice dividend. Minus January and February, it paid a really tiny dividend. I got a little panicked, but then I looked at last year, January, February also paid a very small dividend. And then March, it kicked back into a normal, I think nearly a 10% dividend. And it pays monthly, which is kind of nice too. So I'm going to see what the dividend looks like in March and see if that trend continues. And if it still pays the bigger dividend, I'm happy to keep it. I think by the end of the year, Bitcoin should hopefully be back over $100,000. But then again, no one really knows. Next up, I have a very small position in a similar fund on Ethereum, ETHT. Same concept here. That one's down even more than the Bitcoin account, so I'm glad I didn't put very much in there. But as Bitcoin goes, Ethereum goes as well, and usually gets trounced harder when Bitcoin drops. So that'll be interesting to keep an eye on. Another Bitcoin again. IBIT, this is basically just tracks 1-to-1. This is not a leveraged account. Just a small position in that too. But the big one here is BitX. And if it pays off, it's gonna be great. And if it doesn't, it's gonna hurt. Next up, I have a closed-end fund from PIMCO called PTY. I can get more into that one later. I like the closed-end funds. They pay a monthly dividend, and I usually keep like 2 or 3 CEFs, as they're called. That's a closed-end fund in my portfolio, although they're not as exciting as everything else lately. So I've been kind of rethinking that strategy, but they're usually shortish term holds, like 6 to 12 months, where I can get the valuation out of them and then get out, but collect that nice dividend in the meantime. Next up, I have TMF, which is a Treasury, 20-year Treasury leveraged fund. So the idea here was, as interest rates slowly go down, those are going to have to get reinvested, and then we can get a better return on them. It's been okay. It's like flat. That actually does pay a dividend too. It's like 2 or 3%. So I'm curious to see where that goes, but I'm a little bit worried with this Iran situation and oil and everything, that inflation is going to go nuts. And then the Fed is definitely not going to reduce rates anymore. And if they actually raise rates, that could be bad too for this fund. So keeping an eye on that one. VOO, which is just literally just an S&P 500 ETF, which I should have did with my whole account, like I said at the top of the episode. And then VTI, which is Vanguard Total Index, which is basically every single stock in America, just a little tiny portion of everyone. And one of my, I think it's actually my biggest holding when you include my retirement account too. I own a ton of VTI. It's fantastic. And yeah, there we go. That's everything I got right now. Like I said, I'll put it down in the description below. That's going to change probably weekly because I'm pretty active. So every one of these episodes, I'll update with what my current holdings are at. All right, let's talk options. Let me see what I did this week. Once again, if you don't know options, you can watch this. Just don't take my word for trades. Please understand what you're doing with options before you take any action. So this week, let's remember. Oh, okay. So I had I really like cash secured puts. So in ACMR, it's ACM research. This one has been super hot. So if you look at the numbers on ACM, the calls and the puts are like, the market's crazy on them. The stock had a big drop out of nowhere earlier this week. So I had a $50 put on the stock. Let me pull up the chart. All right, here we go. Let's look at the last month. So it was trading around 70 at the end of February, and then it dropped to like 50. And I wasn't paying attention like I should have. I had it about 30 days out, and now it's in the $46 range. So I actually rolled that over, that $50 put. I bought it, closed it out, and then rolled it into a $45 put in May. This is another wild one. So it's all over the place. So we shall see. I might have to roll it again. I do have a $40 put in ACMR closing this Friday, which I think is safe. It's at 46 right now, but that's definitely something I'm going to keep an eye on. I did buy those extra shares of Rivian, like I mentioned earlier, to sell a covered call on Rivian. My average price on Rivian is still high because I told you I had stock in it from years ago. So my average buy price on Rivian is still like $25 and it's trading around 15. Luckily, the market seems to be pretty excited about Rivian right now. So I was able to get a decent number on a $25 call that I think expires at the end of the month. So that wasn't too bad. What else? SoFi. I did SoFi puts at $15. Let's see where that's, I think it's trading at like 18 right now. Let's check. Yeah, 1776 as of this recording. I sold puts at 15. I've been doing this every week for like 3 weeks now and having them expire on that Friday. So I have puts this Friday, 320 and 327 at the $15 puts. And they pay pretty healthy. Each one of those. On Tuesday, I got a $15 put for $21. So I'm always happy if it's like more than 1% in that short of time frame. I think that's pretty solid. And I'm not worried about SoFi going down to $15, especially in that time period. And then my oil ones, I'm just kind of chasing my covered calls. So I told you about Occidental before. I was down on Occidental. Now I'm up. And I had some covered calls at prices where if they hit, I'd be profitable. But I'm getting a little greedy now because I don't think oil is going down anytime soon. So I rolled a $57 Oxy covered call up to 58 and a week later. So it was 320. It was going to expire. Now it's going to expire on 327 at 58. And I'm just going to keep rolling these up. But like I said, I'm kind of over Occidental too. So I might just be happy to take the profit. That one's kind of TBD. But I've had to do that on a lot of them. My ExxonMobil, I'm actually quite in the money on that covered call. If it sells, I'm not going to be mad because I made a big profit. But Devon also as well, that Devon one I mentioned earlier, I've just been kind of rolling that every week or two as the price goes up. So we'll see what happens. I never set up a covered call that is going to hit at a loss. So no matter what, if these covered calls get claimed, I'm going to be profitable, and I can't be mad about that. And it's kind of the game with covered calls. You take the income, but then also you're kind of limiting your upside, which I'm totally fine with. I think that's it though. So I know I rambled a lot. I hope you got something out of this. I'm going to try to do this every Sunday and eventually go live if we get some people that are into this kind of talk. So let me know what you're investing in the comments below. Anything that you're excited about. I got all kinds of stuff that I'm watching, so I'll try to mention a few every single week. But those ones I am really excited about. I'm going to keep an eye on Caesars. SoFi, I'm really excited about. I'm still going to keep adding to that. Rivian is, I don't know if I'm excited about it as much as I was now seeing the launch of that, but definitely look into that, especially as they're going to start collecting cash, and with those Tesla leases coming up, I think that could be an interesting story. What else did I talk about? I already forgot. Oh, defensive stocks. If you know a defensive ETF, please let me know that you are interested in down below. And the AI stuff, any prompts, any kind of links to good videos that you think are helpful, and some research using AI for stocks. But I think that's about it right now. I'm going to keep an eye on this week because I have like 30 options contracts expiring on March 20th. So that was kind of the monthly options. There's options every week, but the bigger ones are the monthlies, and March 20th is this month. So it's going to be kind of a hectic week, especially if some of those are close to hitting and I have to roll some of them like I'd mentioned earlier. So that's what I'm keeping an eye on this week. Let me know what you're up to in the comments below. Make sure to follow, please. It's at Street Spartz. I'm on every platform too, so you can check out all the other social media platforms as well. And I will talk to you next Sunday.